One can sense that the market is a bit uneasy in terms of levels that it's trading at, valuations, etc., etc. Overall, I mean, you talk to people who are in it for trading, and you can make out that people aren't really very confident of taking longs. I'm talking about trading here, taking longs and then kind of sort of forgetting about it and being able to sort of make money on the long side. So I think there is some pruning of positions which is happening that is very, very obvious. And I think you can connect it back to what happened overnight as well. So, there was a clear indication. So two things happened. The JPY, which usually is seen as a risk, as a haven, as a safe haven currency, any geopolitical event or anything of that sort happens and money rushes in the forex side into the Japanese yen. That happened. I mean, so you can stack it up against the Swiss franc or the dollar or the euro or Asian currencies. The JPY did very well in a New York trade overnight. The second is the fact that that gold prices got bid up quite a bit. I mean, gold, of course, is the original traditional safe haven, so to speak. So those are the two things. The WIX index also hit a high, multi-month high. I mean, actually, it was the highest since 2017. I'm talking about the CBOE WIX, and it got to almost about 16% or so. The stock market was not down that much, only down about 0.14 odd percent. So maybe that might sound as a bit of a bit at odds. On the geopolitical front, there wasn't anything new really. Maybe today, later, we will get some headlines with regards to Russia. But there was one news flow which said that the G7 group of countries have failed to agree to impose fresh sanctions on Russia. Countries like Italy strongly opposed it, coming out and saying that there is no consensus to do that. And watch out for oil today. I mean, just as a cue, OPEC production cut deal compliance levels. I mean, essentially, who is producing what quantity of oil? That we will get later in the day, but that should be around 3 or 4 hour time. So maybe we'll see a move there. But, I think after this very sharp run-up, you're seeing that. I mean, if you put up what is happening to REC and PFC, and we can have a separate discussion about that, but I think the rally in those stocks makes a good point. I think people are now looking at, well, what is really cheap in this market, right? So REC and PFC, at least on a price-to-book basis, are trading at one or so, right? And those are stocks which are doing well. So I think those are good examples in a way of the hunt for cheapness, so to speak, because frankly there isn't very much which is which you can call cheap. I mean, stocks have run up, valuations are. Neelkant Mishra, for example, at Credit Suisse wrote this morning, but he's been uncomfortable with valuations for a long time. So at some point we'll get a bit of a reversal. As I've been saying, we've got many months without even a 5% reversal. So let's see.
Yeah.